Right, so it's all happening. I've been doing these videos since I guess mid-September, and I started doing them because I was just sick and tired of all the diluted rubbish that was out there. I've worked in a trading room, at the bank for literally decades, right? None of the, pretty 99% of the people who do these channels, none of them speak anything like any of the serious traders that I have worked alongside, worked for, managed, employed, even sacked, right? None of these YouTubers come close, right? They're never specific with their positions, right? I think they're all full of shit. They really have got, they're just deluded in terms of some of the bullshit they spin, whether it's about the tricks Wall Street plays on you via the futures market, which is rubbish, whether the delusions they make up with, particularly in regards to options, right? Put call wars, it's all bullshit, right? It's people, Wall Street not wanting to pay out on options on certain strikes, it's all bullshit, right? Wall Street doesn't care about retail punters, it's just all risk, right? I'm going to do a video particularly on demystifying options, given that I traded options for the bank, in several different books: interest rate, equity, currency, structured equity options, like the lot, right? Anyway, enough of my rant there. I'm going to go through three of the big themes that I've been going on about since I started doing these videos, right? This is one of them. All these equity markets, they are in. I did some videos back in September which said I'm calling the top, right? Which was back here, right? Back in September. One of them was called "This is the top," and this time I really mean it. But there's a few of them, right? I'm still convinced that was the top. A little bit like it did stretch through, right? But you look at it now and it's certainly like within a bee's dick of the top anyway. But all of them, they're overstretched on a few measures, right? So this is the S&P, the Dow, the NASDAQ, the Australian share market, if anyone cares. You look at them, they're all at the end and just busted through, starting to kick back off these long-term trend lines going back to the GFC, right? They all have a long way to fall, right? That's another thing they've all got in common. When you look at the Bollinger Bands, it is disturbing the width of the Bollinger Bands, right? And these markets do come back to the lower ends of their Bollinger Bands when they correct, right? It just happens even here. Sometimes they go right through, okay? This is what they do. They go to the bottom of the Bollinger Bands when they correct, right? You can see it time and time again, right? If these things go through to the bottom of their Bollinger Bands, it will be a disturbing and painful 30% correction, right? And that is what I think is going to happen. So they're overstretched on the Bollinger Bands, a long way to fall. Got top of these long-term channels, and for pretty much all of them, you can see they've got this negative divergence going on, right? Similar to here, this is the dot-com bubble. We had strengthening price, weakening RSI. So RSIs and Bollingers, they're the two biggest indicators that I use. Here again, strengthening price, weakening momentum, bearish sign, right? And look at it, right? Now the other one, so we've got the Bollingers, right? Bollinger Bands, look at that, right? We've got these long-term trend lines, go tick. We've got weakening RSI, tick. The other thing that we've got is engulfing bearish monthly candles. I did a video on these back on 13th of October when this one happened, and said this is a bad sign. They don't happen that often, and they're very strong leading indicators, right, to corrective moves in the market, and they have ramifications. Now we've got two of them, one there and one there, right? This is not a good sign. You look at them all, right? Here again, they are big leading indicators to bad news, right? They are reliable bearish indicators, right? So we've got a few of them going on. So to me, they are some pretty important signs that I've been talking about since September last year. You can go back and look at the videos. There's one on September the 13th when I said there was a major top in place, and another one on September the 17th saying this is the top, I really mean it. If we look in a little bit closer, this is the futures market, as in the real market. Right? The people who talk about the cash market, you're in for a shock in the morning because you're going to have gapping risk. Right? I do notice one of the channels that used to talk about the futures market being the fake futures market has now ceased that delusional lie. Thank God for that. So this is where we're at the moment. It is a very important juncture. The trend is clearly down, right? We have clearly broken these trend lines going up, and in terms of where we can go to, it is looking something like this, right? Right? Where I do wipe out some of this noise, right? Just down there, I always have, probably always will. We can see that it is just hitting this first fibbo. That is the next target, right? In here, somewhere within that range to me. That will be a good fibbo retracement. If we look at the extension of this move, where will it go to? Right there, right in the heart of it. Right in the heart of it. Some people are talking about, it's going to go to 4,000. Look, I think if it's going to break through here, it's going further than 4,000. There is no reason for it to stop there. There is a little bit of a gap in here, which I've had my eye on for a long time for it to fill. But I think it could quite easily go here. And when you think about it, that is the last big point of price action. Right? Here, right, that was when I said, look, there's a top in there, right? Sure enough, it pulled back, shot through, came back, had a bit of a bounce off it, and that has been the level that it is obviously found. It came off, found some support, came through, found some resistance, and now, to me, it's all over. So that's one of the big themes that I've had in terms of these markets being stretched on some very, very key indicators. Right. The next one is the interest rates. And again, I've been talking about these rates for months. I've been short Aussie 10 years since January last year. Since then, I've been added to those shorts, short Aussie 3 years, short US 2 years, short the Bund as well. And I think if you go back and look at some of my videos from October, kind of around mid-October, I think I did some, certainly around the 20th at least, in here, you'll see me talking about the 2 years in particular and how it was taking off, and this gap that it was going to fill in here, which it certainly has, and then some. I think one video I did was 20th of October. That's here, right? Some people are talking about it now, right? But they've missed this whole move, right? Idiots. So that's been a great little trade for me. I'm still short these bonds. I'm a little bit cautious. They will have a bit of a pullback, which they have, but I still do think that they've got more to go. So you can see on the 2 years where they can really go to. They've got, they're at like 140 or whatever. They can still go to like up 2% quite easily. And again, the 10 years, this is really, to me, telling the party could well be over as far as where they could go to. And the target that I've had in mind here is linked to this. It's around about 3 point something. Let me just go down into a daily here. Right, is it going to let me do that? Here we go, let's go again. It is something like this, right? Up there. See that projection? It coincides very nicely with this level here, and about 3 1/4 So those bonds have still got more to go. So that's the second of the big themes. So the first macro theme is, the goose is cooked here. I guess the other one that I should include here for completeness is the 155 months. When you look at from this point here, that was that 74 crash up to the 87 crash. That's like 155 months on the dot, right? When you go from that point, right, up to the GFC, right, it's high here. It's another 155 months. Surprise, surprise. From here up to where we are today, you take it to 155 months. Zoom in. Look at that, right? Right on schedule, right? Right on schedule. So that's another one that I've been talking about. That one I talked about at the beginning of the year. Generally said, look, the time is up, which it certainly is. So that's 2 out of the 3. The third one, which kind of builds on that and says, look, right, we're starting to see all these markets really starting to fall apart now, is this one, which I've talked about a few times. This, is a 2-year notes. This pattern is deadly, right? Where you've got a big spike up, okay? So you've got a big spike up, right? You've got a consolidation period. Let's just get this consolidation period, right? And then you've got a big drop down, right? That's in the 2 years, okay? We've got it here in the Russell, right? So we've gone up, right? We go up there. I'm just going to change this to red. We've got like a consolidation period, right? And now it is coming down. Now, the thing that's very dangerous about these patterns is when they move, you can see it here, they move very suddenly, right? Just as suddenly as they came up, they shoot down, right? Now we can see it everywhere, right? Okay, this is Amazon. It's going up, right? Like that. It's got its consolidation, right? Where's it going next, right? Likely going there, right? Look at Spotify, okay? Same thing. It's shot up, right? Okay, here we go. It's having its nice little consolidation. Often these things have lower highs as they come down, right? And then all of a sudden it just drops off a cliff and it literally sinks like a stone. Here's another one, Roku. I don't even know what Roku do, right? I don't know, right? And I don't care. Beautiful double top, right? Shoots up, right? Right? Shoots up. A lot of money changes hands, right? And just as the enthusiasm and euphoria here drove it here, you've basically got the mirror image of that mood there, and it just tanks, right? Here we go. Here's silver, right? Silver's the same thing. Let's go on a monthly for silver. Just wait for it to catch up. Look at that, right? It's done it twice. Sometimes people just don't really learn, do they? Look at this. Shot up. Consolidation with lower highs, right? And then it just drops off a cliff, right? That was back in 2011 to 13. Here, look at that. It looks like it is about to do exactly the same thing, right? As I said, these patterns, they are deadly. They are absolutely everywhere, right? You've got it in a fundamental financial instrument, such as the notes. You've got it in this nice, small caps. You've got it in some of the biggest companies, like in the world. You've got some of the trendiest companies, right, in the world. Here's another one that I've shown, Peloton, right? This is another kind of nice, meme stock, right? Look at that, right? It's doing the same, or has done the same thing. Look at that. There's Peloton. What else? Look at GameStop, right? Same thing. I mean, it's disturbing. See, it's gone up, big shoot up, lower highs, right? And it's going to shoot right down there. What about Avis? Avis was another one, another meme stock that all of a sudden just went off to the races. And you look at what it is up to and the trajectory. If it comes up, same thing there. That's like that's a weekly, right? So if we can get a daily on there. See there how it shot up, had this consolidation with some lower highs, and then when it fell down, not as rapidly as the other, but it certainly fell down and just closed that range. And this is the NASDAQ, right? Look at it, right? I mean, take your pick as far as what the potential is for it, tanking, right? It is not good at all, right? And it's all the same. The markets are doing it. All these markets are doing it the same. I've never seen a different. I've never seen this similar price action across the board in so many different companies and instruments. Right? It's a deadly pattern, and you can see when it happens, it drops like a stone. It's the Russell. I mean, it's really got like a long way to go down here. Where's the price range for that pricing? That is going to be probably 20% off the top of my head, 17% from where it is today. Ugly, right? The NASDAQ, where could it go? Right? Let me just get this thing kind of working. If it plummets 26%, that fits with those first group of things that I was saying to you. And of course, here is shitcoin. And you just look at it, right? If you're long Bitcoin, get out. If you made money, good on you. Get out, right? That'd be my advice. But you just look at, this is what these patterns do, right? Some of them are leading, like more than others, right? All of them are susceptible to it. And look at this one, right? That's going to take it down to 11,000, which coincidentally is the 85% correction that Bitcoin has had several times over. Now, you might be looking at these charts saying, they're all logarithmic. That's right, they are all logarithmic. And the reason why they're all logarithmic, because the log scales, they do show parabolic moves by definition. Sorry, they're linear, right? The linear ones show the parabolic moves. You do it logarithmic, you don't see the parabolic nature, of course, right? So that's why they are shown in this way. Look, that's pretty much it for today. But as I said, look back over my videos. There's some ones in September, the 13th and the 17th, talking about major tops. There's one on October the 13th talking about monthly engulfing bearish candles. There's some ones in October. There's one like 20th to the 28th talking about the 2-year bonds. But they're really been my 3 big themes that I'm sticking to in terms of equities. I'm bearish. Bonds, I'm bearish. Right? And these patterns are really going to come to fruition across the whole markets. Now, one that I haven't really talked about is gold. Gold, I've got a tiny short position in gold, right? It's as small as you can get. It's like, I think it's the smallest you can get is like these micro futures contracts, right? So they're equivalent like 10 ounces. They are tiny, right? So the face value is like 20 grand US, right? I am still bearish gold despite what is going on with Ukraine. I think that is some short-term noise. Having said that, it certainly hasn't gone my way. It's a tiny position that does bugger all damage. It's just really have a chip on the table. My reading of this has been a bit more like this all along, as you probably know, right? And that is mirrored in what went on here, right? You can see these patterns. They're not like this one. They're just a series of lower highs. It's not a great, pretty pattern. You could also draw it like that, okay? Just as this one, you could draw a bit like that, right? But they've got the same MO, where you've got very strong price action. You've got a period of consolidation, distribution, whatever you want to call it, and then when it falls, look at this, it just goes boom, right? And I suspect when the rates news comes home to roost, right, and Ukraine gets sorted out, that is far more likely than that. Obviously, I could be wrong. I'll watch my position. I'm going to add to it on the way down instead of fighting it on the way up, I would say. So they're basically the big macro things that I've been covering. There is one last one which I will see if I can get up, which is the US500 versus, I'm still yet to find a good ticker for some high yield indices. They'll be out there somewhere, right? But this is, to me, pretty disturbing, right? Where you just look at, hang on, this should be the US500. When you look at what is going on in the equity markets, right, versus the high yield bonds, right? Now, the way to see this, I think, quite clearly is if you do like a moving average on each of them, like this. I don't even know how long this moving average is for. It doesn't really matter, right? The point is, this is miles away from its moving average. This one is right on it, okay? This again monthly, right? I mean, that as a trend versus here is really, really well and truly, just the gap has really widened up. These yields are leading the way for a crushing in the equity markets. Very disturbing. I think out of all the indicators and correlation and stuff going around, that is probably the punchiest one. Anyway, that's about it. Have a good one. Catch you later.